Okay, good afternoon, guys. Welcome to the live trading session with me, Steve Ruffley. We're going to focus on the Bank of England today. Expected unchanged, but I think I've demonstrated that, especially with the FOMC minutes, the interest rates are certainly more in focus now than they ever have been in the last 7 years. And really, we're just using these growth figures now to confirm when interest rates are going to go up. Bit split decision at the minute, I guess. Most of the market commentators say we might as well flip a coin if it's going to be a Fed hike in September. I'm not too sure, again, to be honest. I think the Fed might leave it as close to Christmas as they can, and again, just use it as a political tool, try and, slip an interest rate hike. People have Christmas some time off and then start the new year, and it's just a new norm. So I think that's probably after that kind of really indifferent non-farm payroll that we saw that was, a little bit less than expected, but certainly not bad data. It didn't really give the market any direction. So subsequently, we've had a lot of turmoil. We had obviously Monday off with Labor Day, and the last few days trading have been very, very difficult. I was buying some low in the DAX today and just found it very, very difficult to hold on to anything. Just the movement is very, very choppy and just not particularly nice trading environment right now. Seen a lot of strength in the pound this morning, so that could be an indication that we're ready for liftoff in the UK, timed in with the Fed. And I think that's what we're going to have to focus on today. Look at the asset purchase facility, if that changes, and any comments, any statement that comes out that talks about, we're ready to engage in the cycle of raising rates. So I'll go through some more points about why it's so important, this meeting today. And not that we're expecting a rate hike, but why it's important to listen to any comments from Carney, because that's what the market's really trading off. So before I start, as always, the risk warning, remember that spread betting and CFD trading carry high risk or capital and resulting losses could exceed your initial deposit. The member suit for everyone, so please ensure you fully understand the risks involved. The information provided here under no circumstances and offers a station to invest. Nothing here in construed investment advice. The information is believed to be accurate. The data is produced. Education only. Content of the webinar is personally opinion of the moderator and intro.com. Content is not constitute financial investment or tax advice. Intro.com is not accept any liability for the content comments during this session. So we'll go over some live charting analysis, multiple time frame trading. Any products you want to go through specifically, let me know, and I'll go through them. We'll go through the fundamentals, obviously. That's really why we're here today. And I've got my account open as always. I'll be trading my fund, so only real money trades. So we've seen this strength in the pound against the dollar here. So really kind of came in this morning. We hit this good low level, 1.5379. I've just seen, that downward pressure taken away, and then, a really good 4 hours, of good buying action. I think what I'll do is I'll just put it on the different time frames, just to illustrate how these things work. So, when we're looking, what's happened in the markets, then we need to understand, what's relevant to the time frames we're using, what's relevant to what profit we're trying to make, what's happened in the past, therefore what's happening in the future. Now, we saw quite a big sell-off in the pound from this 1.56 area last week, and we continue to sell off. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 selling days in indecision around this double, level here, this daily and weekly level, then at 1.51. And inevitably, when you see that amount of selling over a period of time, and that's, again, the best part of, 2 weeks trading, you're going to see a bounce. You're going to see some green candles. So no surprise that we see this green daily candle here. Then the next market opens up, bit of profit taking from this long-term move. But again, you have to figure out where we're in relative value now. So if you take the down move and look for the Fibonacci, we've only actually hit the 38.2. Okay, so if we don't see a break above that and get towards 1.54920, then again we have more sellers than buyers in the market. So obviously, when we just have all these kind of huge selling days and the market doesn't know what to do, well, if it can't go down anymore and it's sold off for 10 days, and it has to go up. It's as simple as that, and we've shown that on a number of times, like the euro dollar chart on the monthly, where we saw 11 months of selling. Obviously, at some point, you're going to have to see some green. You never, ever, ever, ever see a chart on any time frame that is just, consistently one colour. It just can't ever happen. Markets don't function that way. So what we're looking for really is this bounce here. I mean, how strong is this bounce? Okay, we've taken away that profit taking from yesterday, and we're towards the top of the range, I guess. But we'd have to break above this 38.2 level and this weekly level here at 1.54235. before we start, aggressively thinking there should be some buying inertia coming in to send it up to that 50%. So really, as we continue to close below this 38.2, we're actually still a little bit negative, I would say, in the pound. I guess it all depends what is said today. I think a lot of people are disappointed by Janet Yellen because she was meant to give clear forward guidance, and she simply hasn't given forward guidance. She's kept the markets guessing. And now it's boring. Now we're worried about China. Now we're worried about, the emerging markets. Blah, 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 blah. Why are we always so frightened? The world's so frightened all the time. Or they make us think we're frightened all the time, to keep control. It's fairly boring, to be honest. Janet Yellen and the Fed and the Bank of England and the ECB especially have kept interest rates low for 7 years. Now, these things work in cycles. You don't have to be a genius to know that it doesn't matter how bad the world situation is, or how bad individual country situation is. You can only do so much with interest rates. You can only keep them historically low for so long. What goes down has to go up. What goes up has to come down. And that doesn't matter what you're talking about. Okay, it doesn't matter if you're talking about inflation. It doesn't matter if you're talking about interest rates, growth, GDP, non-farm payroll data, the price of oil, the price of gold. I could literally name anything in the entire planet. It does not matter. Everything moves in cycles. So there will be a point in the very near future where we have to raise interest rates. You cannot run a country or, a global economy on hyper low interest rates. It just is irresponsible. And everybody knows this. So Janet Yellen has said that it's basically data dependent. Right? So what does that mean? Well, all she's saying is if the growth data and the inflation data supports her view, then they will have to put interest rates up. And it's not that they might have to, and it's not that it's coming. It's inevitable. They're going to put them up. So when that happens in the US, it's going to happen in the UK as well. I mean, you can see the situation of the property in London. Average house price in London now is something like £500,000, which is 10 times the average wage, or something ridiculous. And it's just kind of, will London house prices keep going up forever? Yeah, no, because I've said it's all cycles. So we've seen these huge increase in prices. It might take another 5 years, 10 years, whatever. I don't care. It doesn't make any difference to me. I don't have a house in London. But there are plenty of people that do, and plenty of people that have borrowed too much to buy these houses. Okay, so what goes up will come down. So it doesn't really matter, what happens with interest rates. When they start to go up, if they've done nothing but hold for 7 years, then the minimum I think they can go up for is probably 7 years. Because, we're not going to put them up to 5% overnight. It's going to take it's going to take years and, many kind of small increases to get them back to normalization. And normal rates, are literally a million miles away from where they are now. And we're talking about 1 million people not being able to afford the mortgage if interest rates go up by 25%. Well, in 5-10 years, they can go up by probably 10 times that to 5%. Okay, so if you can't afford 25 basis points, you certainly can't afford 5%. And if you've got a mortgage for 3 year, 4 year, 5 years, you've got it for 20, 25 years, maybe 30 years. So in that 30-year period, your mortgage is going to go up every year for the foreseeable future. That's why Janet Yellen's worried, why Mark Carney's worried, because all they've done is tried to boost growth with consumer spending and, not in the traditional ways of creating business, creating wealth, creating opportunities. So obviously these things are going to hit ahead. So when we're looking at the pound now, again, we've hit these levels up here on the hourly charts. Big candles. So we're seeing a fair amount of volatility in the pound. So this could be people speculating that a rate hike is around the corner. So we've seen maybe the institutions, the central banks sell the pound off, and then we're going to see this hard bounce. I mean, if you look back on the monthly charts, we have seen this big sell-off in the pound, and we've made lower high, but then we made a higher high, and then the market did sell off, but it hasn't made a lower low yet. So what I'm saying is we've got this really big ranging scenario where the market doesn't really know where exactly it wants to be, but it certainly doesn't want to be high, in these previous periods in time. But then, in this previous period of time, it doesn't actually want to be that low. So I think really we're heading back to 1.6465 in the pound, because again, people will eventually realise that the euro is no value whatsoever, and that will plummet below 1.0. And the pound is a relatively safe currency, I would say, in world terms. With the problems in China, the problems in Japan, I would say the pound's going to come back in vogue. So I'm buying every low in the pound because I see tremendous value. So obviously it was quite low in the monthly range. When you look in the weeklies, again, a couple of weeks of selling, but then really this week we've bought all that back. And I guess, we're looking for these kind of fibs again. So I think once we get above 1.54893 in the pound, we're going to see it hit back to 100%, which is this level here at 1.58185. And then I think we're all the way back to 164, which is not really, kind of that high. We could certainly get above 1718, but I would say really, that the market for me is tipped its hat. It doesn't want to go lower. We've seen these sell-offs, which I'm sure are central banks and institutions, and they're just buying huge amounts at the bottom, anticipating a rate hike next year. And again, once the US do it this year, and if it's not September, it'll probably be December. If it's not December, it will certainly be January. And it doesn't really matter, does it? We're talking such short terms in the grand scheme of things that once it starts, it isn't going to stop for a considerable amount of time, is it? So when we're not talking about, intraday trading, we're talking about short-term trading. We're kind of talking about medium-term trading, because we're talking about, quarters now and, kind of quarters of interest rate hikes and these different cycles. But once this cycle comes in, it's not going anywhere. So back to the dailies, again, as I pointed out, we saw these big selling days, one bit of indecision, on that Labour Day. And then the market's bang, it's back, buying, and all the indicators are saying buying. So for me, I would say that it's really a good opportunity to dip buy still. And I think that, even if you drew like a basic trend line, I know we've broke through, but that would be my first kind of point of attraction, and that's again way up by 156. So we get through the 50% and heading towards that 100% again. So it might take some time, but I would say it's inevitable that we get back to a 1.58 the next. I would say the next couple of weeks. So I don't think the pound's going anytime soon. But again, it depends what's said from the meeting today, doesn't it? I guess, and anything that that's said. The asset purchase buyback, or again any kind of slight comment or forward guidance on interest rate. So that's the pound. Obviously, we've seen a bit of strength and some selling before the announcement, which is. So we have obviously a lot of other products that are moving. Very very kind of sharp sell-off in the DAX, and then immediately bought back up. I was buying the DAX down here, but I really couldn't hold it as long as I wanted. It was just too volatile. Again, led by the S&P. S&P doesn't really open until 2:30, and we've seen these big candles, up and down candles, which is really, I think, driving the move in the SMI and the FTSE. So really nothing's happened in the indices. Really, we've gone up, we've gone down, so we're back to where we were. So really, where's the indices going to go from now? I think that, everybody's realizing that interest rates are going to go up, and that means that the free cash is over. And I think people are getting frightened. They've been frightened by, the stock market tumble in China. I think they've just realized that it can never happen. They are a risky investment. So when people can't get, the kind of returns versus the money they've invested in indices, they're obviously going to sell off. So I think really we've made the kind of highs that we're going to make now, and as interest rates become the only focus of the market, and they can only go up, I think that the indices are destined to have a major correction. So excuse me, I'm surprised that gold hasn't really moved much more today. We've seen big moves in the pound, big moves in the euro, and a lot of movement in the dollar yen. And gold's kept this very, very tight range. Obviously, yesterday we saw a big sell-off. We saw this, again, I was so convinced this was a great level to break, and I ended up buying gold. I still made some money, but I ended up buying it rather than selling it. Sometimes you talk yourself out of what you know to be true. Again, this is just another great example of the 50% Fibonacci on the dailies at 1126. Market tested, closed below, tested again, and then bang, nice sell-off, break through the 61.8. So as I've said, gold really wants to break 1100 again, and it's going to get to $1,000. I said it in the FT 2 years ago, but they do it by now, so I'm a little bit late on my call, but it ain't getting back to 1900, that's for sure. So I think gold, again, it's got a big level to test at just above 1100, and once it breaks that, I think we're on an absolute march to $1,000, and then who knows? Who knows? When we look at oil, you think you found a bottom and then it smashes low. You're always going to see bounces, but I would see that once gold, closes below 1100 again, breaks these lows, down here at 1073, etc. I cannot really see a second time gold surviving an attempt not to reach that $1,000 key psychological and technical level. So gold, I guess, yeah, an interesting one. in a tight range, so I'm expecting this afternoon something to happen. We've got two options, obviously, as we always do in trading. It's going to go up or down. I would say that this is a prime example of where you'll see the US market open and gold will probably spike up maybe 60, 70 ticks, maybe 99 ticks to the 61.8 for absolutely no reason. It'll close down about here, then it'll go on to break these lows and test the 100. So I would say look for any big fake outs in gold, any pin bars, any stop grabbers, any sharp buyers in gold to be buying gold at these levels. So it's not like it's a bargain level just yet. So I would say any big spike hourly 15-minute candle, they're rife to be sold because, again, that'll be some sort of squeeze looking for this downward continuation to happen. And we know a downward continuation is going to happen because you do a fib. Okay, so we're nowhere near the 50%. We're nowhere near the 38.2%. We're really just hanging around the 23.6, so the lowest point, of which, the market can tell us what it wants to do. So really, what's going to send it back up to the 50%? Probably, institutional buyers or, some sort of squeeze. Realistically, the market's saying that, well, we don't really want to buy above this level or sell above this level, but the trend is down. We're below the 50%, so down really is the call for me. So is really, what I'm looking at. So Pan on Fire is saying you get out early on short instead of moving stops. I got out early in my longs in the DAX. I think I told you about just because of the risk I'd taken. I'd taken a lot of risk on the downside, and that's why I took the trade. Not because I didn't think I was right. I just wanted to kind of reassess and wait for the trade. When you trade the kind of size I do, it's kind of sometimes, if you've had a big offside position and got back to a bit of profit, it's wise just to take the profit rather than, trying to push your luck because, the market looked to be, quite negative. I wasn't expecting it to jump up as quick as it did. And as quick as it did, it sold back down. So, difficult market conditions, Pan on Fire. So sometimes you got to just get out of dodge sometimes. Any thoughts on the yen? Well, I think we can only go higher. Again, we look at the monthly charts that I've shown you before many, many a times. We've still got this gap in play and, this buying action. We've had an opportunity to sell off in the yen here, and we've come back, another opportunity to sell off. So really, we're holding on to these 120 levels, and I can't see the selling coming in until we get above 135. So interest rates, as we say, have to go up. They have to go up in absolutely no uncertain terms sometime in the next 6 months. So that means that everybody who's long the dollar from here, long this gap from here, are still long. Because once interest rates confirm, we're going to see a spike and then a sell-off. So I don't see the yen coming down until we've hit 135. We've seen the dip buying in action. Look on the weeklies. Again, looks a little bit negative, but we're still massively towards the top. We're still within this big range that we can see here. So as long as we stay above I would say that that all the bets have to be that we go towards 135. So for me, buying, I've always been said, haven't I? Buy every low in the dollar, sell every high in the euro. And I said, the pound is a good buy to 164, but you have to pick the right kind of time. You can't just buy it at the top of the range, can you? You're looking to buy pound against the New Zealand dollar or pound against the yen. Well, again, they're probably going to all look, pretty similar to this. The pound against the yen is going to look like this, I would guess. I'll bring it up and have a quick look. We've got 12 minutes, yeah, plenty of time. So, GBP. So let's go on the monthly straight away. So I'd expect an uptrend. Well, there we go. So, what we can see is market really started the downward move here. Did make new lows, but didn't close below them. Where's that 50% here? Some nice bounce. So, yeah, you're seeing just the same as the dollar as you are in the pound. We've had previous highs before, way up here. So what's to stop us to get into, to 239? Nothing. Basically, we've seen an uptrend continuation here, consolidation with the fibs, which is lovely on this chart. So what you're looking for, Pan on Fire, really, is the market to hold around this 50% at 179, then you're looking for a break, which is conveniently at the highs of the 61.8 at 193. Then you've got probably your 200 psychological level to aim for. And then I would say you've got plenty of opportunity to get out anywhere between here. So I would say, if you're long any time now, your stop is back here, at 179 to get out here, buy some more perhaps here to get out here, or who knows, here. So, I mean, it's a pretty clear-cut chart for me on the monthlies. If you cycle through to the weeklies, same kind of scenario. I mean, draw any kind of, conclusions you want, but that to me looks like a market that wants to go back up. Rejection here, gone higher, rejection here, higher, rejection here, higher, sell off, bounce off a trend level. So you've got to get to 193, spot 391, and then 200 being a psychological level is always good to look for in the markets. So I would say, I mean, looking to buy the pound against the New Zealand dollar is an absolute no-brainer for me, Pan on Fire. I think you again, as you always do, you've picked out a nice market to trade. Not for me personally, but again, each to their own. We've had this downward correction and bit of profit taking, but 1, 2, 3, 4, 5 days of buying. So I'd say definitely looking to break these daily tops and get back to that 61.8. So I think that's a good trade. I'm not too sure about the pound against the New Zealand dollar, but I guess it's a fairly similar thing. I stay away from the New Zealand dollar and the Aussie dollar. I just find them too unpredictable, I don't see enough edge. A lot when you look at the charts, it looks like if I just bought here and, sold here, it'd be great. That's not how I trade. I'm looking for the movement, and I'm looking for liquidity. I'm looking for, big players to come into the markets, and I just don't see that happening so much in the kind of Aussie and New Zealand type currencies. So for me, I generally stick to the products that you see on your screens now, which are obviously the main indices: gold, the S&P, euro dollar, dollar yen, and the pound against the dollar cable. But good question as always, Pan on Fire. It's nice to have your input, nice to have your thoughts. So really, we're looking for the figures today. We've got, the Bank of England voting on, are we going to change the interest rates? And it's 0.5 as expected, and pretty much everyone's saying, we're going to stay in line for now. I think the other things we can look at, obviously, is the monetary policy statement and the minutes, which are also kind of will be, put across the wires. And then we've got to look at the asset purchase facility, which is expected again unchanged at 375 billion. But again, these things eventually have to change, and we've got the Bank of England, to vote on change 8 of 8. So it'll be interesting to see if anybody has gone against Mark Carney and anybody thinks it's now time for a rate hike. Employment's back within tolerable levels. Inflation's back within tolerable levels. We've got this main problem where we're discouraging people to buy houses because A, there's not enough affordable housing and they can't afford the mortgages in the first place. But we can't keep on with that inequality, and we can't keep letting people that have equity and money in houses keep buying more houses or remortgaging, because it's not responsible to do. You can't keep saying my house is going to go up in value 10% a year, so I'll borrow 20% of its value every 5 years and expect these things to continue. There will be a point in time where all the baby boomers die. And then, it ain't too far in the future. It's probably only 15, 20 years when all this property gets passed down. I've told you, I inherit a lot of houses, and I intend to sell every single one of them. I have no interest in property, no interest in owning lots of houses. I have no interest in protecting for future generations. Yeah, they're on their own for me. I don't care. So all the money I get, which will be substantial, will be spent. And I think I'm not alone on that. And, that's not because, the boomer generation was smart. The boomer generation were less than smart. They did exactly what they were told. They went out and got a job, bought a house, and, paid the mortgage off, and that was fine. When average house price in 1980 was 37 grand. It's not the same when the average house price is £250,000. The average wage hasn't gone up in correlation. So these things won't be in history. Or in the future, that's for sure, because there's simply too many people. There's simply there just isn't the same world conditions to allow these things to happen again. So there will be some normalisation in house prices, and it will start in London, as it has to, and it will revolve around interest rates. So anything that's said from Mark Carney today, is going to have massive implications for people over the next, not just trading hour, but the next kind of, 3 months, 6 months, 12 months, 3 years, 5 years, 10 years. The next generation are going to be massively affected once again by interest rates because they're only going to go up for a foreseeable future. So we're seeing weakness in the indices again. We're seeing the DAX come back to the low, the S&P's back at the low, the FTSE again looking to test these levels down here at 6159. The pound again really staying towards the top of the range, but not anything overly interesting happening in the pound before this Bank of England meeting. Euro's still looking relatively strong. Again, I still think, very much we're looking for that 1/100 level in the euro. A 1.0 dead parity is definitely on the cards. I mean, all the things about Mario Draghi coming out saying we can quantitative ease more if we want. Where's the money coming from Europe? What's Germany? Yeah, I mean, I'm sorry, I talk quick, but these things, happen, don't they? It's, I have to talk the pace I do because there's a lot of information to pack in these sessions. So the pound, what do I think? Well, I mean, again, it's what do we assume? From the monthlies, I've said, and the weeklies, we're actually, fairly low in the range, I would say. We've got value back to 1.64. The Fed have to move on rates this year, and that means the Bank of England have to move on rates sometime in the first 2 quarters of next year, in my opinion. So I can only see the pound going back up. So we've seen a lot of strength in the pound today, a lot of strength in the pound, over the last kind of, couple of days, and maybe that's leading to the Bank of England changing its vote, from 8 saying unchanged to maybe less people saying it's time, to be responsible and put rates up, and I think that's going to bring extra strength into the pound and more demand. So again, we've seen weakness in the pound against the dollar because we know that interest rates are going to go up in the US before the UK, so that's why it comes down. But then it starts to go up when obviously we start buying the pound over the yen, we start buying the pound over the Aussie dollar, the euro, whatever else, because interest rates are going to go up in line with the US. So today is all about figuring out, when that's going to happen. We know that interest rates are going to go up, more than likely this year in the US, and that means that the UK will have to do that at some point in the next 6 months. So it's if this statement's going to mean that's going to be sooner or later. So simply the big levels to look out for, back up here at one spot. It's difficult to say off this weekly chart. I would say daily, really, we're looking for, if we see that, the market wants to buy the pound, then we could get to 1.55701 today. Okay, so we could break the weekly level and easily go up another 148 ticks. So we've gone up, a good, 240 ticks since this morning. So if we have any inclination that the Reds, the Bank of England and Mark Carney are thinking about a rate hike at some point in the next 3-6 months, and that's, more than the market expects, and we break this weekly level at 1.54239, and then we had 150 ticks up to here. Okay, so we've got the impetus, we've got the buying in the market already. So, again, if we come completely unchanged, then maybe the market wants to take a little bit of stock and we come back down. So that's 1.53278, and then make your own mind up. I mean, you could do a Fibonacci, couldn't you, of today's move? So you could say the 50% may be the target here. So back to 152,896. So again, all depends on the votes, I guess. At this 8 of 8 have said unchanged. It all depends on the asset purchase buyback. It doesn't matter. We're not going to. We're 99.9% sure we're not going to see a rate change today. So the headline figure is not that important. What we're looking for is the monetary policy statement. Okay, anything from the minutes and anything to change in the asset purchase facility and anything to do with the number of votes from 8 of 8 being unchanged. So that's what we're looking for. We're not focusing on the actual interest rate decision today because that's not what we're in now, is it? It's what we're in today to find out is the pound going to be affected in the short term or medium term? Are Mark Carney and the Bank of England going to finally put the money where the mouth is and say it's time to raise rates? So as I said, still no real movement in gold. I'm very surprised with the dollar being so high. With the dollar being high, and again looking, very high against the Japanese yen, you'd expect gold becomes more expensive, and it's in a natural selling environment to come down, and that hasn't happened. So we could see a movement around gold. I don't know. Either which way, you're going to see a massive movement in gold this afternoon. Mark my words. Okay, guys, so less than a minute now. So we're not looking for an interest rate decision change. We're expecting 0.5. Keep your eye on the asset purchase facility, 375 billion. Have a look at the vote, 8 of 8, and let's just see if there's any statements, anything released, any comments that we can jump upon. So really looking at the FTSE and the pound. Okay, so these two charts here. All right, get ready, guys. 10 seconds. Unchanged. Unchanged for the asset purchase facility. 8-1 split. So maintain rates 0.5. Pretty much in line. Waiting for any comments now. Okay, so we're seeing a spike in the pound. So on that 5-minute chart. So watch the pound is actually spiking now. So we're just breaking that weekly level that I pointed out before. So cut GDP growth forecast. Some see risk of inflation shooting over the 2% target. Unchanged MPC voting 8-1. Okay, well, the recent global events haven't changed the central point of view. So very much like we've seen from Janet Yellen, okay, which might be another slight indication that, yeah, if we're on a raising policy and we're going to raise rates, then we're not looking at China, we're not looking at the other external factors. So again, that is something that's very important to listen out for, you know, that we don't have somewhere else to hide. We can't blame our own growth or slowdown on China. So we're getting back to that weekly level now at 152. 4 or 5. So a nice 5-minute spike. So taking this, you know, as good news for the pound. So across the board here, data in line, but obviously we've seen a reaction on the 5-minute charts. I'll just show you here. So again, I mean, a fairly decent spike from the lows. You know, a good 45 ticks. So we've hit that weekly level. So it was a good idea to maybe short that short term. But now what we're looking for really is if this 5-minute candle kind of holds on, and we're taking this as realistically that the Bank of England have all voted for unchanged, asset purchase is unchanged. But the message is that we're not going to blame the rest of the world for our situation. You know, most of our data is in line. You know, it's not great, but it's in line. So that means inevitably after 7 years, we have to put rates up. So that's what I would be thinking, you know, from what the market's really taken this. So a little bit of a downturn in the FTSE. So obviously, you know, a little bit of strength in the pound makes the FTSE more expensive. So FTSE's dipping down with the S&P, the SMI, and the DAX. So still remaining towards the top in that GBP. Again, I mean, not really any kind of great levels to aim for, I'm afraid. I would say we break substantially, then really 154,893 is the kind of daily 50% that I pointed out of that down move, that 10-day down move that we saw. That's probably the key point to get to. So I guess you're either a medium-term buyer to that level, you know, in intraday terms, or you're waiting for a bit of a spike up and we sell some of the highs. So indices, after that little bit of a rally a couple of hours ago, are looking to get back to where we really opened and get lower. S&P's really been driving the markets for some reason. I think we're going to see a big move when the US markets kick in. So that pound spiking again. There's a pound spiking again. So again, we're getting above 1.1537. So we've got another 53 ticks to that 154,893 level. But if we get there, we're going to be selling some pounds at that. So finally, might start seeing a move in gold as well. Gold's in this very, very tight range. You know, we're towards the top in the dollar yen. So you know, the dollar's still relatively high. Euro potentially might take a bit of a bid and follow the pound, and then you'd expect obviously the dollar then to come off, which should mean gold will break the highs here and maybe target 113.5. So yes, no more real comments coming out from the Bank of England or from other market commentators. And realistically, I think it's in line with what everyone suspects that you know, if you're a policymaker, you know, you can't just keep saying wait and see, wait and see. You can't just keep saying we'll see what happens in the future. You know, the future's here, the future's now. We've had 7 years of pretty much, you know, the ultra low rates. and there's only so long you can keep these for, and there's only so long, political pressure, kind of global pressure, and there's only so long that the UK will say, well, it doesn't really matter now, does it? It doesn't matter what the consequences are. We cannot seem to be this irresponsible, and we're going to have to put them up. We have no choice. We have no alternative but to put rates up to some any kind of normalised level. So that 5-minute candle's open now. So we've closed towards the top of the 5-minute range. So again, look for this. Look for another kind of spiking happen. And really, it's all about this 50%, this 54893 level for me. So, looking a little bit more negative, I guess, in the FTSE than the other, the SMI and the DAX. No real movement in the euro again. Not that you'd expect it off UK data, but you'd think, with this spike we've seen in the pound, that some euro buyers might come in. You think that maybe some dollar buyers might again try a quick squeeze before selling down. So again, on the 5-minute charts, the pound again has made fresh highs now. So what I want to see is some quick movement. I want to see some quick movement and hit that 154.893 level pretty quickly. And if it hits that level, then again I'm going to be in. So what I'd like to see is the market spike, and that's getting people out. That's people not knowing where the market's going to go to, and then using that fear in my favour. And again, I need to average in to maintain the position. Then I'm happy to do that. Yeah, pan on fire, absolutely. I mean, again, this is why you have to be, very kind of in tune with what the markets are going to do. For me, it is about the FTSE, and it is about the pound against the dollar, and the pound against other currencies, because it's UK data, and UK data is very sensitive to the UK. It doesn't really necessarily affect other markets, and that's why we're not focusing on gold, or the dollar particularly, because this is all really UK centric. So no real other comments coming out of the Bank of England. I'm quite surprised that nobody's made any more bullish statements, or saying now's the time. Mark Carney is the guy. Where should we buy the GBP USD? Well, I mean, if you want to buy it, you have to buy it probably back at this weekly level here. But it depends how long you want to hold it for. So the weekly level, is 1.5218. But if you want to buy it, I'm saying it's probably going to get to 1.54893. But that's why I'll be selling it. So if you think it's going to go higher, then you need to be buying fairly soon, expecting it to then hit these upper levels. So nice, big, strong 15-minute candle. We've got an age to wait for that to close. Another 7 minutes yet. So it might be interesting in the next 2 minutes if we get another green 5-minute candle. That could potentially then spike us up round to that level that I want short at. And again, I'm a short-term trader, so I'm not saying that if I think it's going to go up, I know what you're thinking, I should buy it, but I don't want to. I want to sell it at a level where I see value. Do I think the Kiwi will go down? I think all the kind of the Asian type markets, the New Zealand dollar and the Aussie dollar, will continue to go down because they've got so many problems. You've got problems now with, China now chucking the money out of China. And obviously it's going to go to Australia and New Zealand potentially because they're close geographically. But I don't think New Zealand or Australia particularly want that. So I think the currencies are going to struggle. I think they're in a lose-lose situation, the Aussies and the New Zealand. They just don't have the numbers. They don't have the history. They don't have the capacity outside of, tourism. So I would say that realistically for me, I just wouldn't be buying in any kind of quantity any Aussie dollars or New Zealand dollars. And that's just my opinion. Like I said, I don't really trade them ever because I just don't really have the interest. So I think, longer term, they'll continue to go down. So 1 minute now for this next 5-minute candle opens. So this is what we're looking for now, for this candle to close towards the high. Again, I'll show you. So wait for this to close towards the high. If it opens up, then this is the level we're looking for on the dailies. This 1.5, 883 or 893. So again, just literally a minute or so. If this candle closes green, you'd expect probably it to open towards where it closes, and then to target the highs, and then maybe a quick spike up, and that's when I'd want to sell. So if open towards the highs, so if we get that quick spike up, that's when we might be able to start some selling. See, it's not always the way how a market gets to where it gets there. It's the speed in which it gets there. Remember, the quicker a market moves, the more people are going to be wrong. So if a candle goes up 100 ticks in a 5-minute candle, then there's going to be people that are short term wrong, people that are medium term wrong. So the speed in which these candles move, is just as important as where the market is and where it's been. So again, when you look at the SMI here, very, very quick in an hour to get to here. This daily level rejected it and opened, and it took again very little time to get back down. In relative terms, we've seen one big rejection here, 1, 2 to get all these shorts out, and then we see one big spike. Well, then you'd expect it to continue, wouldn't you? Really, after you've got all these wicks here, but it doesn't. It sells off the next hour. So it bounced off again. This a very good level here at the FTSE, towards this low at 6159.82. So, I mean, it's difficult to say whether indices are going to go with the US Open, but realistically, I think they're going to continue down, I would say. Again, with this currency spiking in the pound, you'd have to say that means that everybody now is thinking that interest rates are more than inevitable, and that they're coming, they're literally around the corner. So I haven't made a new high in this 5-minute just yet on the pound. So again, that's where you have to be a little bit patient with these things. The dollar's coming off a little tiny bit now. Again, that could be potentially attributed to the pound strength. So dollar goes down, you may expect to see a break up in gold. Again, nothing happening in the euro at all. Really kind of very, very quiet trading period for the euro right now. I'm not entirely sure why it's not doing anything here, but just doesn't really want to kind of move up or down, does it? Really, it's not taking any emphasis or impetus from the pound, or certainly the dollar. So it's looking a little bit green now. So a little bit green in the pound. Again, we're not looking for much movement here. I'm just looking for probably another 40 ticks up to probably make myself 20 or 30 ticks on the way down. So, again, I mean, not a damn squib by any stretch of the imagination, but, I mean, nothing really kind of clear-cut that would give you enough confidence, I guess, to buy the pound. You would have had to really be kind of speculating long into it. But now the pound is up. Is the pound going to stay up? It'll be closed green today. Again, that 50% of the daily retracement is what we're looking for, that down move. And as I've said, I think 1.64 is achievable in the next kind of few weeks or months. And I would be buying the pound because realistically, if everybody knows that the interest rates are going to go up in the US, then they're not going to go up in Europe, are they? So where's the next best place? The pound in the UK. We're one of the only currencies rich enough and that controls our own currency and our own interest rates. So when we decide to press the button, we're going to press it, and it's only going to be up. All right, guys. Well, I guess not a great deal I can add now to that landscape. I would say that, as I've said, 1.54893 is a good level. The 50% daily down move that we saw of them 10 selling days. That's what the market will look to trade to if it's going to continue going up. As the US Open happens, I've no idea. Keep your eye on gold, because I would say with the dollar looking relatively strength against the yen and that tight range we've seen in gold after the sell-off, we're either going to see a big spike up and then a sell-off, or just a pure sell-off. I don't see how gold can go up and stay up. So that's the two scenarios. Stocks looking a little bit undecided and weak. Again, the FTSE looking a little bit weaker than the rest of the European indices in the US. So again, I would probably be patient now until the US Open. I don't think there's any US data this afternoon. Let me just have a quick check on that. There's a little bit of US data, but nothing really major. Export prices, Canadian new houses, natural gas. So no, nothing major, I would say, from the US. So realistically, I'd say normally the trends continue, but I'm not sure what the trend is. I think the overall trend is down. whereas the short-term trend, is a little bit bullish. So I think be very careful of trading the indices. I would say probably look for your big moves in the dollar into the US Open. So pound against the dollar, obviously, and obviously gold. And if the dollar starts to really kind of weaken, we'd see a spike in gold, but then it to be sold off. All right, guys. Well, not much I can bring to the table now, I guess. We've seen that spike in gold, in the pound, and that can only mean that interest rates really are back on the agenda, and it's going to be sooner rather than later. So I would say probably Q1 for Bank of England to raise rates. All right, guys. Well, enjoy the rest of your trading. I wouldn't jump into anything right now. The markets are very, very volatile and choppy, so do be patient and do wait for the right opportunities. Anything else you want to do, guys, get me on my email. Or you just Google that, or if you want to get me on Twitter, Steve Ruffley at Twitter. All right, guys. Well, again, let's watch for this pound. I'm going to be watching it for the next half an hour, and watch for that 50% level. It's going to be interesting. All right, guys. Take it easy. Speak to you all very soon. Thank you.